All right, so the question that came up is sometimes when I enter a trade, maybe 30 minutes, 1 hour later, I don't feel good about my trade and I want to exit the trade at a minor loss or a minor gain. For example, yesterday on the Canadian dollar Japanese yen, I wanted to exit at a 14 pip loss. If I wasn't in your program, I would have exited. However, I didn't exit. I wanted your opinion about this behavior. And a beautiful analogy here: if a surfer takes up a wave, stood up, sometimes he or she bails right away, understanding that the wave was not the one they wanted. Then the surfer has a short paddle back into the starting point to wait for the next wave. Can we do that as a trader, or is that frowned upon as a bad habit? Listen, once you reach the constantly profitable stage of the program, 3 months in a row of 1% average return, right? First stage, get to break even or barely profitable. Then from there, you're working on 3 months in a row of an average return of 1% per month, right? Then we have, well, that's the constantly profitable stage. Once you have achieved that, you can decide what you're going to do and not do. I personally stick by the rule: once I enter, I do not exit, as it forces me to be selective about the trades that I am taking. And it also prevents me from going against my original analysis. If you ever noticed, you get yourself into a trade for some reason or another, you get out of that trade, and then you find out that trade went in the direction of your original analysis. That's how I do it. But once you graduate, right, and you're working towards then getting up between 2 and 3% a month, at that stage, you can then decide whether or not that's a nuance that you would stick to or not. I want to get you here. And to get you here, you gotta stick with your original analysis. And just one more quick question, talking about just getting started once again, coming out of the lockdown, obviously a lot of people need to focus back on whatever work was going on. Now, as we're looking to get reintegrated over here, listen, a few questions. Are you recommending Oanda as the trader platform? I place all my trades on FX Choice on MetaTrader 4. Now, using Oanda FX Trade, whether you're on a PC or a Mac, Oanda on the Mac at least has an app that makes it very easy to trade off of. More than that, you could trade off of Oanda FX Trade through TradingView. Unless you're in Europe. Everywhere else in the world, including the US and Canada, you could trade off of TradingView directly by using an Oanda account. That's pretty cool. That's pretty awesome. So that's something that is recommended, as well as no matter whatever size account you're using Perfect Money Management is so easy. Yeah, you could install the Oanda desktop and connect that to MetaTrader 4 through the FX Trade version of connection. When you're connecting do I install Oanda desktop or MetaTrader 4? If you're choosing Oanda, use the desktop version. It's really easy to use. And then you could connect that to MyFX Book, right, through the FX Trade option. It's one of the installation instructions. It's very easy to do. That's what you want to do. So in your situation, it looks like using Oanda FX Trade and then just connecting that to MyFX Book using the desktop version is the way to go.
How you doing? So I have some couple questions today to speak about how to successfully manage trades. So as you can see this week, I did a couple trades. So there are 3 entries. There's one on USD Mexican pesos, which I was stop loss at break even. Same thing on Euro, Swiss franc. I did 2 entries over here and I got stopped out, which I don't feel bad for it. So as you can see on Euro Swiss franc, I was able to.
So that part's awesome, Randy. You said you took a few trades at break even and you don't feel bad for it at all. That's the mindset, obviously, that you need to have.
Reduce my trade as soon as it went to the first resistance, and I got stopped out to break even. So I don't want to speak about these trades. It's just for illustrate those trades that I made last week. What I want to talk about is specifically these 2 trades. This is where I'm going to need your guidance the most. So I performed this trade like 2 weeks ago, and I kept my position open. So as you can see, this is Euro USD dollar. So after the price broke the 5-year.
All right, I'm very familiar with this trade because I took it too. My first entry was over here, and then I added to that position over there. So let's see. Let's see what your question is here.
Trend line. I waited for the retest and resumption. So that's when I made my first entry. I put my initial stop loss under this swing low, and then the price kept moving upwards. So I've been reducing the portions of this trade as soon as the price came into resistance. First resistance, I moved to my stop loss to break even. Then when the price tested this resistance, I took like 20 to 25% off of my position.
Beautiful.
Same thing over here. When the price started making lower lows, I reduce another portion. So I only hold around 15 to 20% of the original position, which I'm planning to keep until this.
So exiting over, so this is a break of resistance right here. The fact that you exited over that was nice to take your first initial 10 to 20% off over there. But this was a retest into that broken resistance as support, right? So only below here would you want to exit more of that trade. You want to be holding on after breaking this resistance over here. You want to be holding on to that position, looking to exit into the following resistance over here, a larger piece, not exiting on that pullback into broken resistance, turning it as support.
This at least hits this trend, this resistance over here, or if the trade starts making lower lows. Now the question is, is there a more systematic way to actually manage these trades? As I believe that I need more guidance. So I know that you speak about moving your stop loss to break even as soon as the price hits the first resistance level, and then
you did that great too. That's perfect.
At least aim for 2 resistance in order to start reducing your position. But I feel like since I am new and I am still learning your system, I feel like I need a more newbie kind of methodology in order to successfully learn how to execute and manage these trades.
All right, let's begin there. So trading is very nuanced. You cannot put it into this little beautiful, easy, pretty box. Otherwise, they would just have machines doing it. If it was just following a set of rules, that's very easy to put. Trading is not like that. In this course, what we're doing is providing a means, a system, a strategy that is pretty black and white, where people could follow that and become profitable. That's the goal, right? First, to get you to break even and or profitable, slightly profitable, break even or better. And then, 3 to 5 weeks, and then from there, you're moving on to consistently profitable, risking that 0.5% per trade, looking for a 1% return monthly for 3 months. From there, you go ahead, and now you're risking 1% per trade, looking for that 2 to 3% per month, 24 to 36%. But I cannot just tell you if A, B, C happens. What I can tell you is this, and this is what you need to focus in on right here to answer your question. And it's a common question. It takes time and experience as well. But when you're talking about the first thing you do is you understand the first support or resistance, you're moving your stop loss to break even. Great. Keep doing that. You're fine with a portion of those trades getting stopped off at break even as well. Keep doing that. That part you've already overcome and are fine. Now over here, right? You moved into the first resistance above there. Taking a small piece off is perfect. That's fine. Take off 10, 15% of that trade, whatever it is, right? Now you got out too soon over here. This was a mistake because you already know that you're supposed to be pushing the next resistance level where you're looking for the majority of your gain, right? So that's what you need to do. That's what you need to do. You need to look at this trade because this did go on to not only take out that resistance over here, it's trading above it right now, right? So you know the potential was there for you to get, you exited a good portion of this trade way too early. You were holding a small piece up here. You should have been holding the big piece up here. Get it? That's what you need to work on. And I'm going to show you right now, looking at your results. And by the way, I started at June the 15th when you started. There were some big gains, 5% gains before there, 2 of them. So I removed those. You're doing fantastic because, I mean, you're at break even or better, right? You're at break even or better. And now you're going to be working towards 3 months in a row of meeting that goal. I do notice that your win percentage is very high, as well as your average win to average loss are very close. That's not good, right? You want the average win to be greater than your average loss. The only way that happens is if you're holding on to those winners and pushing them, right? Perfect example we just looked at together right here. You exited down here. You exit a small piece here. The majority of your position here, and when holding on to a small piece, right? Just look at this one trade, because you're only taking a selected amount of trades a week and a month. This one trade makes a big difference, and not only this one individual trade, the whole methodology behind it, the whole mindset behind it, of understanding that you're already comfortable, you're already moving your stop loss to break even, you're already comfortable taking a portion of your trades at break even. Now you're just afraid to push them. You got to work on pushing the trades because your win rate is a little high, which is causing your profits to be a little low. So one step at a time, that's what I want you to focus on.
So that's for Euro USD dollar. Something else that I want to show you is New Zealand dollar versus Japanese yen over here. As you can see, I noticed that this is like a bull flag, and as soon as the price hit this resistance over here, now support, as soon as the price made a higher high, that's when I made my entry. I put the initial stop loss just before.
Wow, great entry.
Below the swing low, and I would patiently waited for the breakout. As you can see, it happened over here. But I experienced the same thing as with Euro USD dollar, where I started reducing my position over here like 20%, then another 20%, and another.
That's perfect. We don't need to go any further. The same thing is happening as on the Euro US dollar. You are taking profits and exiting the trade too soon. That's clear to me when I looked at, right, your average win and average loss, which are the same with such a high win percentage, that you're taking profits too soon. And don't get me wrong, your results are good, but we're going to improve them and make them better. Now, I think it's ingrained in your mindset going forward at this point that what you need to work on is pushing your trades. You're not pushing your trades. You're taking profits too soon. You have to be comfortable with taking even a higher portion of trades at break even, right? And by doing that, you're going to increase your overall average win. You're doing good. You're well within the parameters. I want to see you keep going and just work on that. That's exactly, and it's so complicated, and you're looking for like, well, if this higher high and lower low happens as this occurs and that occurs. No, you're looking to push your trades, right? To do that, you're looking to push them, right, 2 or 3 resistance levels away for taking profit, right? That's what you need to focus in on, and that's what we're going to do going forward. Good job. Really good job. You're trading really well. This was even a tough day yesterday, and look, you're break even. That's excellent trading. Good work. Keep going.